Luke, no numbers today at the bottom of the hour. We did have the API yesterday, a small build of about 2 million after a draw last week. I think it was 7 million or something. The numbers have been kind of teetering. Today we get the EIA at 10:30 a.m. Eastern. How much are you looking into inventories right now in terms of a driving force behind some of the price activity in crude oil?
Yeah, hi, Ben. Thanks again for having me on. I think I'm watching it. I'll keep an eye on it, but it seems as if the commodity markets, oil, copper, some of the others, are beginning to look through some of the nearer term data in terms of the things that have traditionally moved them in the short run of inventories and some of the supply demand, and starting to maybe look forward to the back half of the year, whether that's expectations of a continued recovery or that's expectations of continued stimulus or perhaps dollar weakness or overall currency weakness, et cetera, as gold might be hinting at. But I think that helps explain some of this dichotomy, I guess, between what we've seen in terms of the inventory builds and the economy relative to what's been a relatively solid oil price over the last couple months, given what we've seen.
Luke, OilX, a company that provides advanced oil data, analytics, and oil market intelligence, is reporting that Chinese crude oil imports in June hit a record high. They're saying that basically China's oil imports hit a record of 11.93 million barrels per day. That's an increase of over 800,000 barrels per day from May levels. Again, can you talk to us about, it seems a little bit weird to hear that those imports are hitting record levels amidst some of the pandemic concerns. I mean, I guess one could point to that's probably been buoying some of the prices that we've seen, but ultimately, I guess we need to see a little bit more in terms of real maybe draws coming in terms of some of the numbers here in terms of the EIA before we can get maybe above that 41 level. That seems to be a bit of an area of resistance right now.
Yeah, I think that's right. I mean, ultimately, oil, you've got to consume it, right? You can buy it and store it, but there's only so many places you can store it, as we learned back in a couple months ago before it begins to impact prices. And so, yeah, I would expect that China has probably been importing aggressively with prices as low as they were over the last 3 months. And I have not looked at where they stand in terms of storage recently, so I don't have context for how much longer they could continue that activity. But to your point, I think that's right, that ultimately you do need some sort of follow through on actual demand, actually consuming that oil.
Yeah, and here in the U.S. as well, not necessarily just China. Luke, definitely, and that's a good point that you bring up, actually, about potentially they're filling storage right now at lower prices, and a good time to do that if you have the capacity and the ability to do so. Let's move on, though. I did want to get your thoughts, real quick on crude, because that's where I think the focus in terms of economic data is going to be during the day today. But gold is probably another focal point for traders, and I'm sure you've been dialed in on the move there if you're dialed in on commodities, and I know you are. Above 1,800 it was, I think, last week. It kind of lost some of the momentum quickly, backed off a bit, but it seems like every dip in gold has been bought. The bulls are definitely in control here. The buyers seem to be in the longs, continue to be rewarded for positioning with the trend that we've been seeing, which has been going on for a while now, up and through 1,400. What's behind the bid?
I think what's ultimately behind this bid is if you look at the outcome in terms of really two things. I think we came into, towards the end of 2018, we saw a U.S. fiscal problem begin to accelerate. That problem accelerated through 2019. We saw gold react well to that, particularly in the back half of the year when the Fed was effectively forced by that fiscal problem to begin growing their balance sheet again. You've seen that U.S. fiscal problem, and to be clear, it's a problem for basically all Western and all sovereigns in terms of their fiscal issues. But as we moved into 2020 with the COVID crisis kicking off, that slow-moving fiscal problem turned into a very acute fiscal problem. And I think what gold is sniffing out ultimately is, from here, there's really two paths we can go. The paths are quite binary. If the Fed and global central banks don't do enough, you could get a very chaotic unwind of global debt levels that are as high as they've been in a very, very long time. Or if central banks do enough to prevent that chaotic unwind, as we have seen in the last 3 months, and as we think they'll continue to do, then gold should stand to benefit from fiat currency debasement. And so gold is really one of, if not the only asset class that really stands to outperform other asset classes, almost regardless of which of those two binary outcomes take place. Whereas just about every other asset class, you're going to be right with one and wrong with the other. And so I think that there is a very consistent asset allocation move to gold. Investors came into this U.S. fiscal problem with basically record low allocations to gold. And then from a historical perspective, they're still extremely low. And so I think it could have quite a bit of ways to run.
Yeah, and I imagine it doesn't help the bears to have Atlanta Fed President Raphael Bostic talking about how he expects to see a bit of a bumpier road ahead and how they're really not sure if the pause that we're seeing is, well, just that, a pause or something that's going to be more sustained. Let's talk about copper, though, because for the most part, I mean, we were just mentioning how crude has kind of lost some of that momentum to the upside, but copper continues to show strength. I mean, this is directly tied to, again, demand in China and ultimately, better and expectations in terms of economic conditions to come and optimism that we've been seeing in the stock market as well.
Yeah, I think that's right. I think there is an economic component to it, and I also think too that there is, as well as the case with oil, is we're getting to this point of this binary outcome in terms of the financial situation with the pause potential that Bostic was referring to, and that we've seen with the rise in COVID cases, where we now have a pretty good idea what the Fed and other central banks are going to do if things do turn down again. And with bonds already yielding basically zero or less than that across the world or across much of the world, I think you're starting to perhaps see some money flows into things like copper and oil, as well as gold, as we just talked about, in expectation of what is likely to be a somewhat structural need for fiat currency debasement in coming months, quarters, and years.
Yeah, copper back to end of January levels. If crude was back to end of January levels, Luke, we'd be talking about up around the $53 level right now. So it's lagging a little bit, but certainly enjoying some gains with the stock market. Luke, in terms of as we head into the week, there's not a lot of economic data that we're dialed in on. I'm curious what you're focused on. I'm going to be watching the PPI number on Friday after, I think it was last week's Europe's PPI number came in significantly lower than expected. They were raising some deflationary concerns. What are you going to be watching as we head into the middle, into the end of the week, of kind of a little bit of a lull after a very busy week last week?
Yeah, I've been digesting some of the data the last few weeks. I'll be watching to see. I'll be interested to see actually gold pretty closely, because it's been interesting to me. For a lot of years, you'd see it overnight, and in Asia it'd be up, and then you'd come in the morning and it'd be sold off in London and sold off again in New York, and then it'd sort of climb back up. And that had been this pattern. And there's been this reversal in the pattern where you check it out in Asia before you go to bed, and it's off a little bit, and then you wake up in the morning and it's being bid in London and New York, and so it's a little bit of a change. I don't want to ascribe too much motive to it or too much importance to it, but it's a change, and so I want to see how that continues, because I think ultimately one way that we can communicate for a bunch of central banks that would really love to communicate that their policies are gaining traction. One way they could communicate that is if gold is breaking out to all-time new highs in dollars, as it already has in basically every other major currency in the world. And so I think gold actually is becoming an increasingly important barometer for other risk assets in terms of expectations of currency debasement, currency weakness, et cetera. And as we know, to the extent the dollar weakens, that's historically been positive for risk assets, emerging markets, commodities, et cetera. So that's probably something I'll be watching, just to see how gold trades through the rest of this week.
Luke, one more real quick, less than 30 seconds. How about the jobs report tomorrow after the slight bump, the increase last week? There's some concern out there. Are you?
I'll be watching it, but I don't have a strong opinion on it one way or another. It's the numbers can be noisy week to week, and so I like looking at the 4-week trend more than just the week to week numbers. So we'll keep an eye on it for any outliers, but don't have a strong opinion one way or another.